Hi, everybody. I guess I had a black screen. Okay. How about now? Can everyone see my charts?
Yes,
Euro
coach.
USD.
Yes,
Oh,
everything is
oh,
okay.
okay. Thank you, Steve. Hi, Barack, Shahab, everybody. Hope everyone had a good week. I just want to show you something on this. It's Friday, so I start looking at weeklies because you get so caught up in action. It's nice to know what a market did on a weekly basis, even on Friday. I know you do a lot of that, more macro things at over the weekend, but I just want to show you that it's not your imagination that things are unusually quiet in Euro USD. Look at this week. Look at this range. Okay. And then look throughout the rest of the chart, the price chart on a weekly. I mean, we're going back to 2016, and there is not a smaller weekly range than what we just lived through. What do you think? Hi, Monica. So, what does it mean is, the question I ask myself. And, well, I would say that the market's going to like a weaker dollar, right? What's our president been complaining about? And what would multinationals, what are they complaining about? Too much dollar strength, right? So, a weaker dollar actually is,
Be careful what you wish for, I'm gonna
yeah,
say.
yeah.
At some point, they're gonna be hoping for the opposite.
But for a while, it can be a lift for the market. In '08, if you go back to '08, '09, at the end of the last financial crisis, the dollar broke about 30%, and the market rallied 30%. So you could get nominal gains out of debasing your currency or the currency, whether you're doing it intentionally or not. Anyway, so when I look at the euro right here, the one thing that comes to mind is, I remember a lot of these adages, and one of them is don't sell a sleeping market. Okay. Don't sell a sleeping market. And this is more than taking a nap. The euro's in a coma. Okay. So it doesn't mean that it won't decline anymore. The adage probably comes from people being lulled to sleep with a quiet market. And, the other saying is that markets bottom in silence and top in violence. So I can't get short this thing because of that adage. And I think that we're setting up for what may be a bigger week next week. My guess, and that's all it is with this type of tight range that we're going to get something whippy. Maybe we start off early and spike, or we start off higher and flush. But I think we're going to get some pretty good action next week because we had none this week. So maybe we'll alternate on euro. So when it comes down to it, I mean, it was my turnaround Tuesday trade, and I think it was in here, and I said buy it. It was about 16, 17, and wow, you would have had a 20 pip drawdown, and now you're making money. I like the fact that, in fact, I'm not going to do this because it's a Friday, but I'm starting to think that there's something brewing for now that everyone's blown out of this trade. We this right here, and everyone's saying that new lows are a layup. I don't know about that. So EG tells me we could get some type of bear market rally, and that would favor euro longs over cable. So I'm not doing it today, but as you can tell, we've been diverging for a while here. That's your 4 hour, and this is, even your 1 hour. We're not confirming new lows. This was the last confirmation here about 4 days ago on the flush. So this would make me, if I think this is going to rally, this would make me either constructive, the euro, or possibly negative cable. So just something else I've noticed. The yen's interesting. It sure proves my theories of trend lines, right? Because I mean, this is how most people would draw this trend line, right? You have two touches here, and we broke down yesterday under 50, and now we're back above this trend line. So, trend lines to me are probably the least important part of my work. I draw them because I know people are looking at them, but this is not an old maxim. This is mine, that trend line's destiny is to be broken. And I rarely would sell a breakdown from a trend line, maybe a formation, but not from channels. Okay, so that's just my style. Have to admit that the dollar did start leaking yesterday when we had this right here, and I'm expecting another wave down in the dollar, so it's very possible that we started. We couldn't get to 61.8, so that again reinforces that you probably want to buy the euro here, okay, and own it. And if not, look for spots next week. I thought that I'd have a chance. I've been trying to be patient all week with this WTI, and I was talking to Tracy yesterday too. And when we were up here, I thought, okay, we could finish this off, and finally head up to 61.8 at 58.50, and the market was holding up, and then the market spiked last night, and here we are. The week is. Uh, it's a down week. Didn't give us a 2-week off number, but now we're going to start threatening the other rectangle on the downside now. So, we did this, got to the resistance, and 54.85, or right here, this is the rectangle I'm talking about on the 1 hour. It's this huge rectangle here. So we're right in the middle, closer to a breakdown. I'd go with a breakdown on this, because this, to me, if we're going to break down, is certainly a lot of distribution. And even though the S&Ps are making a new high today, they're coming off. Look at this glaring divergence on all time frames. There's your 4, even the 1 hour did not blow out the divergence. See this? I'm not saying that we can't rally, some people are saying 31.20, but uh, it's so close I could taste it. Actually, NASDAQ has a weaker RSI structure. See how we almost blew out the divergence here in the S&Ps? We didn't get close on NASDAQ. Okay, so the NASDAQ is my preferred short of the two, and I think that about wraps it up. You have to keep an eye on the trade war currency, and Steve showed this testing the breakout. It's starting to make some progress from here. It was a good call by Steve here. And that's about all I have to say, except that if you haven't done it yet, how about it? Oh, the yields. I was looking at the yields here, and I was thinking that, maybe they had like, here's a 10-year, right? All right. That it did enough. It took this out. But I kind of think that there's going to be another one more shot up. As you can see, the bonds are even a little stronger. So, something that David brought up. Remember how everyone was so worried about the inversion of the yield curve? Well, now we're starting to steepen. And David Jensen would show some charts that the market didn't get in trouble on inversions, but pressure in equities happened with the steepening of the curve. I'm not exactly sure what the reason is for that. Banks like a steeper curve because they could borrow cheap, but they've been doing that anyway. They don't care about the curve. Look at your credit card. What they get their money. What's the cost of their money? 0%. So you go, oh gosh, I have a great rate on my credit card. It's only 9%. Well, that's a nice spread, don't you think? And I look at the TLT, we had a bounce. This was a throwover line from this wedge, and look at how it kissed it. So, it could be it, but there's something about this bounce in TLT on the daily that I don't trust. Okay. I mean, every rally is getting weaker, or as this was a weak rally. This doesn't look that strong. And on a weekly basis, we're close to a 2-week sell. For some reason, I just don't trust it. So if bonds are going to rally from here, they're going to rally without me. And if I'm right about one more washout here in TLT, I would say that what we had in the end most likely was a false breakdown yesterday, and we're going to get one more push up towards above the 109 handle, maybe to 110, and that's something that Grega spot on talked about yesterday. So, I don't know about you guys, but how many different names did I mention during my analysis of the market? Okay, so this is, yeah, right. Yeah, he thought it might have been over, you know, and it changed from a week ago. A week ago, thought yields could have gone a bit higher. I did too. We got a bounce. I just don't like that pop in TLT. And if you're going to buy um, bonds, don't buy 30-year paper now. You want to buy shorter term paper when the yield curve is steepening. Okay, Brock, you don't want to go out to the long end anymore because it's going to be weaker. Rates will go higher faster back there. Okay, well, we'll see. Anyway, hope everyone had a great week. If you did, give me a Y if you had a good week. Oh, congratulations. Hi, John. Congratulations. Neil, you didn't? Okay. Are you a subscriber, Neil? Good, Glenn. Okay, Rio. It's the dollar's fault that you had a bad week. Well, you know what? I mean, let me coach you here. All right. Well, you know what you lost in the market? Maybe you would have avoided those bad trades if you had been a subscriber. Just something to think about. And Rio, you cannot, yeah, Rio, you cannot blame an instrument for it not being, for you losing money. People say, "Oh, I got burned in the end." No, you didn't get burned in the end. You were wrong. It's not like there was any fraud committed against you. And the dirty dollar, oh, that mean dirty dollar. Oh, it's stupid and unfair. Okay. Anyway, save your beliefs for elections, not trading. Okay, it's always fair what it does.
Yeah, my my personal advice on that
Yeah,
is that
you have psychiatrists in the family, so this will be good.
Emotional responses to what the market does helps in absolutely nothing.
No, and it can make you sick physically.
Yeah,
Too.
there is no stupid, there is no fair, there is no unfair. I mean,
yeah,
we all play by the same rules. If you have a proper risk
I got
management,
burned in the market. No, you didn't get burned in the market. You weren't properly prepared to trade the market. Right? It's not the market. Now, maybe in relationships, it might be a little different. Do I believe a one side? Yeah, I think it's fair. Yeah, I just be long. If you had been long, you would have thought it was fair, right? Okay.
yeah. I mean,
Anyway,
I'm I'm the biggest advocate of fundamentals because fundamentals work like gravity. Eventually, nobody can escape it. But I've said 100 times on the show that you cannot trade based on fundamentals. I mean, I understand people that are frustrated because they know, for example, that stocks are extremely overvalued, that the dollar is very overvalued in comparison to the real fiscal data of the US and everything else. But if you trade on that, you're going to blow up your account. As simple as that.
Yeah, and I never blamed the stock market for the thousands of dollars I've lost trying to top pick this thing over the last decade.
And and and,
Sometimes it
and they've
worked,
said it,
sometimes it didn't.
and
But
and they've said it before, but it's very, very vivid in my memory. I remember, and Blake will testify to that because he has been longer, and I bet he remembers as well. So many people that were expecting the Aussie and the Kiwi to weaken. Aussie was trading at some point above parity with the dollar, and everybody, banks were sending out um, letters showing with how many metrics the Aussie was overvalued in comparison to the dollar, and everybody was trying to short that market. And the vast majority of those people that were, persistently stubborn in thinking it has to happen now, it has to happen now, they ended up blowing up their accounts. And eventually, they were right because, as I said, fundamentals is like gravity. But it doesn't matter because they didn't have accounts anymore to trade.
okay. Anyway, I'm glad the rest when people make comments in chat, the rest of the attendees can't see it anyway. So if we just don't comment on it, it's like it never happened, right? Because I'm not going to continue this conversation. What's going on, Blake? Are you happy it's Friday?
I'm happy it's Friday. It's been a spinning my wheels week. For me, it's up and down and up and down. It's frustrating because, last night, and just so you know, guys, I'm actually short dollar yen. And the funny thing is I was short. My cost average is around 80. We're at 71 right now. So when we dropped down to 30 yesterday, we were below this little trend line here. This is a 4-hour chart. You can see this from the lows, cross through the trend line. I covered at 32, I think, is where I covered just a small portion. And then I sold it again last night at like 56 on a retest of this trend line. And then here we are at 70, and I'm just sitting here going, why didn't I just cover the whole thing? That's the story of my week. It's like up some, down some, sitting in it, frustrated. And, if you guys don't know the reason why the stock market's at all-time highs this morning, well, you had, the administration's couple of the key figures, Kudlow, talking last night on, I forget what it was on. It was on Fox or MSNBC. I don't know. One of the things he came out and said some positive comments regarding China. Wilbur Ross came out this morning, said made some other positive comments, like basically a deal's getting done. And there's a Chinese U.S. delegation meeting today, just so you guys know. And so these comments have strengthened stocks. There's no reason for anybody to sell the S&P right now. I was looking at this chart yesterday, which I blogged about it regarding the Nasdaq 100, and it was interesting. I had this crab pattern drawn on here, and it was Andre that gave it to me because he tweeted about it last night, and I saw it briefly. There's a crab pattern here that's there's a 361% extension right there, 161% extension, something like that, right? So that's a crab, and I had that drawn, and I'm like, where'd that come from? And then I saw Andre, he tweeted something about it. But we're up against pretty big confluence here, and I'm thinking, stocks seem a little, little frothy here. But the risk is you get these comments on China trade, and here we go, S&P right back at new highs. We're just gradually grinding higher.
Hey, Blake, who said this? Wilbur.
That would be the Mr. Ed.
Yeah.
Yeah, damn.
All right, that was
Wow,
good.
that was good.
Wow. What were you? Three
I was
years old?
probably
Fill me in. Who is Mr. Ed?
A talking
his
horse.
talking horse is back in pre Andy Griffith days, I think. Right?
Well,
It's
you brought
like,
up Wilbur Ross. It just made me think Wilbur.
anyway, he was out. He was they just they're marching their administration around, talking positive about China, keeping stocks elevated. The thing about the market is it's fully priced in the best case scenario. So I think the buy the rumor, sell the news is quite realistic, upon some sort of, agreement being made. But buy the rumor, sell the news could also look like this, just so you guys know. This is what I think could happen. It's going to look like this, and I'm just going to be exaggerated here in the event that we get a trade deal. So let's just let me redo this. Let me do that. It'll look something like this. Whoop. Ah, crap. That's not what I wanted. It'll look something like that, right? That's what I think is going to happen. Whoop, whoop, straight up, straight down. You can see it by the way that the market reacts to these positive headlines. That's probably the realistic expectation. You're going to see a spike up and then probably a reversal. So, the flip side to that is, let's say that China's just stringing the U.S. along, and then nothing gets done, and eventually, as Steve was talking about gravity. Eventually, gravity will take hold. You'll get people that get tired of being long, and then eventually it starts selling. And then you start getting indication that maybe something's not going to happen this year, and then people start aggressively selling going into year end, closing up their books. So either one of those is a viable option at this point, but until we get some concrete evidence, then this is the likely path, right? That's the likely path, is just a continued grind higher until we have some sort of evidence that things aren't did happen or going to happen, or there's a signing, and or there's just there's nothing. Then people start to panic that we're not going to get anything this year, and then you start to see a gradual sell off. But until we have good indication either or, I think the grind melt up higher in stocks is just, it is what it is. It's what's happening and what's going to continue to happen. It is frustrating to me because this dollar yen, it tried to break lower yesterday. Now we've bounced back to the 38% retracement. Let's just recognize that. And I know where my stops are at, and my stops are up here in this neighborhood. I don't really want to get stopped out here. No one wants to get stopped out, but I'm there's still a lot of time left in the day. So let's just understand that we have retail sales coming up here in a few minutes. We're going to see the strength of the U.S. consumer, see how strong that they are, because that's one of the pillars of strength that's actually keeping the economy elevated right now. But there is a lot of time left in the day. If we close back below 108.50, I'll be more inclined to just hang on my position. If we close up at like current levels, I'll probably just take it off and go drink some beers this evening, which I think I'm going to do regardless of what happens by the end of the day. But that's kind of how I'm looking at like the yen right now. And like I said, there's the bull case and there's the bear case. And the bearish case of like equities is that we're really fully priced in every the best case scenario, and stocks are a little frothy. Bull case scenario is hey, if we get a China US some sort of agreement done, then maybe that puts the S&P close to the 3200, and people just don't want to miss that move. So you can argue both cases. And right now obviously what Dale said earlier is ringing true. Don't short a sleeping market. Right now we do have a sleeping market, and it's a quiet market, so the market's just grinding. One of the other things that I was talking with my office about yesterday is thinking about how much money is being poured into the market on the daily via 401ks, IRAs, just constant CTA allocations in the market. There's so much money being poured in the market. No one wants to miss the boat. Everybody sees stocks are up 20% this year. What are we up this year, by the way? Let me just go from January 1st of
I think more than 25%.
it's like 22%. Yeah, something like that, Steve. Let me
I think so. Let's see.
let the data pull up here. 2019. Because of the first would be right here. That's after a decline. So
Yeah.
It'd be right, like roughly here. So yeah, I mean, yeah, I guess we're up maybe like. Yeah, we're up maybe 32% from that. That's from the low, but keeping in mind that that would mean that 2018, 2018, January 2018 to, we were down 18%. But I don't know if that's like kind of the real way to look at it. I mean, you can.
It's also a testament that the market mostly moves based on monetary policy expectations. I mean, think about it. When did we actually tank? When Powell came out and said that the quantitative tightening is in an automated path, and the market was expecting another like 3-4 rate rises this year, and look at the difference now that we actually have aggressive monetary easing, and we have aggressive quantitative easing, and the market is expecting probably more rate cuts in the future, right?
Yeah, possibly, and that's one of the things that's grinding us higher. But I just want to wrap up with guys. It is a frustrating market. And if you're frustrated, and Stevens and Coach are correct. You can't blame the market. We are all trading on the same plane here. Just realize that in these type of grinding markets, you really have to pick your battles carefully. I'm trading a lot less now actively than I have been in recent months, just because this slow grind higher. It's like I don't these types of moves right here, right through here are tough. When you just grind in one direction, and that the S&P has just been grinding higher, waiting for this China deal to get done. Anyway, I have to pass it over to Steven Stelios and Coach for the retail sales. I've got to manage my account for that. But I want to say, have a great weekend. Let's hope we get some substantial news over the weekend that gives us some clarity on future direction of the markets. Keep your chins up for those of you that may be struggling. For those of you that made money, great, good job. Continue on. Just pick your battles carefully, and hope to see you as a Forex Analytics client if you're not one already. All right, thanks.
Have a good weekend, Blake.
Have a great weekend, guys.
Good rest of the day.
You too.
Hey, Coach and Steve, how you doing?
Guys.
Good. Okay.
Good. How have you been, guys?
Not bad. Nice background.
Thank you for the nice tweet, Still.
Oh, my pleasure, man. I mean every word of it.
Yeah. You know me. I started crying. I was so touched.
You were like,
no, I do it. I appreciate it, buddy. And what?
Keep your hands off Stelios. He's all mine.
I have a picture of him right next to my heart. I'm clutching it right now, Steve. Get jealous, man.
All right. So we have a minute to go until that happens. Blake did mention we're another step closer, apparently, to the US-China deal. Let's not read too much into that. We did get data-wise. We had the Euro CPI came in at 0.7% year on year, really quite a bit lower than the target, and not looking like it's going anywhere at the moment. So if inflation is your gauge, there's no way the ECB can turn hawkish anytime soon.
Oh yeah,
They are forecasting inflation to pick up a little bit in 2020, but
doesn't really matter.
let's see.
As we've said multiple times before, they will keep ignoring inflation no matter what it does until they have no alternative, because they know that if they have to pick a fight, they either have to keep the economy propped up or handle inflation.
Yeah.
I did hear one thing, guys, about China that, we were talking yesterday that they could wait Trump out, etc. And, I said, well, yeah, their population is more used to hard times than the US. But it was well publicized, the major disease outbreak they had in their pork population where they lost 2/3 of it. And I read that pork prices, which is one of their main staples, has doubled the price that they're paying, and that they're also having trouble
Sorry to
with
interrupt, guys. We got retail sales a little bit stronger month on month.
Core is a little bit weaker. Empire State
New
weaker.
York Fed manufacturing almost cut in half, actually.
Yeah.
Wow.
So another manufacturing index that is sending bad signals here.
Yeah, the consumer is the last hope now. That's what people are saying. It's 70%. It's okay. We could have a manufacturing recession as long as the consumer is still
it is
spending
amazing.
money.
It is amazing.
Or as long as the state is spending money, right?
Yeah, it is amazing how many myths, have been. They keep. The media.
You guys are experts in this.
The media,
in Greece,
the economists
right?
keep brainstorming people. Keep brainstorming people that the consumer is actually what matters in an economy, which it's like seeing things upside down, especially when we know from statistics that there is a huge majority of Americans, and America is a rich nation, that doesn't have more than $500 in the bank.
Yeah,
where are they spending from? From credit.
Yeah.
How can anybody believe that credit spending on consumer goods, because the problem with credit is not a bad thing per se on its own. Credit is a good thing when you use it to buy anything that creates revenue, that creates income, and it's a bad thing when you use it to buy something that doesn't create income. And the problem is that the consumer is going deeper and deeper into debt to buy things,
iPhones.
Yeah, to buy iPhones, to buy televisions, to buy couches or whatever else, which isn't going to create income. And many people don't realize that, but going on credit in the short term means that at some point in the future you have to under consume to pay off that credit.
Yeah.
So
and actually, now that you talked about credit, did you read about the Labour Party in the UK, what they announced that they're going to do if they get elected? Well, what do socialists do? They spend, right? That's what they do.
Of course.
They're very good at spending. They're very, very bad at everything else. So they said that. So Jeremy Corbyn said they're going to privatize part of British Telecom, the part that takes care of the broadband networks and all that, and they're going to give free Wi-Fi to everybody, free internet basically, and they're going to fund it by more debt. So that's really great.
The only thing I have to say about that is definitely Margaret Thatcher is spinning in her grave at the moment.
Yeah. The problem with socialism is that you eventually run out of other people's money, right?
Yeah.
Anyway, just something funny I read today.
Tech is too expensive. Sometimes you need credit to buy. Yes, listen, as I said, there is no problem with credit per se, but the problem is that the US, and not only the US citizens, are hugely indebted. And the only way you can pay debt in the future is to have a period that you underconsume, so the savings can go ahead and pay your debt. The problem is that also that has some interest, so you actually have to pay more. And another problem is that when you have already built a lifestyle based on credit, making then the decision to underconsume for a long period of time so you can pay off your credit is not an easy decision to make.
Yep.
Yeah. Stelio, I'm pretty sure that you have noticed, and that's why I wanted to start from there, that we have had a substantial move
in the Norway.
In the NOK, despite crude being lower on the day.
I think we were talking about this yesterday in the chat room. I think NOK is not correlated with oil anymore. I mean, very low correlation.
No. I agree. The correlation has,
and so is the Canadian as well. The Canadian.
I mean, the correlation hasn't completely gone away, but it's definitely a lot weaker than it was. Did we have any Norwegian data that have caused, because for NOK to be down on the day, like something like 0.8%, it's quite a substantial move for a current pair.
There was a tiny bit of data this morning. Trade balance came in better than expected. Really nothing to push it. I really don't know what's on the back of it. I'm not complaining, but I don't think there was a particular catalyst for it today.
And the reason I wanted to start from the NOK is because both the main NOK pairs, which is the USD NOK and the Euro NOK, are sending very positive signs for people that are long the NOK. First of all, we retested this broken ascending wedge, and we miserably failed there. And today's candle is a very nice continuation candle. Second of all, now if somebody wants to go even deeper in analyzing this, we can also see that this is something like a head and shoulders formation here. And
which targets that support zone, right? Which is what, 890 or something.
Yeah, which targets back to 892, which is a support zone. Now, having to do with the Euro NOK, we had already mentioned at some point last week, and let me pull it up first.
By the way, Dominic says very correctly.
Analysis on the fly by Steve Volge.
But by the way, our friend Dominic says very correctly that if you look at NOK and oil with the previous correlation, NOK has a lot of catching up to do, and it makes sense. It was all-time highs in Euro NOK, I think, which is insane.
Yes. Insane. Having to do with the Euro NOK, we mentioned like last week or whatever that we got rejected. I mean, I was looking at two trend lines here. One of them was this purple one, which had acted multiple times as a resistance until we finally broke above it. But as you see, the Euro NOK actually stopped at another major trend line, which forms this ascending wedge, and not only has turned lower, but we're now also breaking lower from these previous highs. So I have to say that Euro NOK is also pointing, and if you want to analyze even further, I see like a 5-wave move unfolding here. So I'm pretty positive that Euro NOK probably is a very nice selling opportunity on any bounce. So, for example, if you get lucky enough to get like a bounce back to 10, 12 or whatever, which we might not get it, I think it's going to be a magnificent sorting opportunity. Personally, I'm going to be taking the trade. So I think, they're both looking quite nice. And, I know you notice it. Plus, we haven't had a lot of movement in the market. So, I wanted to start from there because, in my opinion, probably, the best looking markets today are those that have to do with the NOK.
Cool. Thank you.
Okay. Now, having to do with indices, the S&P is still grinding higher, but look at this. It's grinding higher, still, kissing the ascending wedge resistance again and again. And not only that, we're now also entering what I had marked since, much lower as a key area of multiple resistances. Anything between 3107, which we did reach today, we even surpassed it, and 3125 is a very nice area to find resistance and likely get rejected. So I would.
Are you putting a piece on here, Steve?
I'm probably doing that today. Yes, I'm probably
Yeah,
going to
okay,
start
I
with
figured.
one third of a position here and see how the next week starts and build from there, because I think it looks quite nice, especially in combination with the fact that more or less the same deal is
Everywhere.
happening here in the Nasdaq. I mean, intraday we're seeing a slight overthrow, but still, I mean, basically we're on top of resistance.
And actually, I was commenting to a few guys earlier that the RSI structure, even though today the NAS is up a little bit more percentage-wise than S&Ps, if you look at the RSI structure, it's weaker in NASDAQ on, like, say, the 4-hour time frame or the 1-hour time frame. Okay, so there's S&P like right at that dotted line. Now pull up NASDAQ, same time frame. Well, it looks a lot of like, try the 4-hour.
Here's the 4-hour. So S&P and Nasdaq.
See how much lower it is?
Somewhat weaker, yes.
Yeah. Anyway, just something I noticed, and also Jim Welch's writings is that there are more cracks in that. And I looked at what Microsoft did yesterday, and it kind of put in a negative candle. Oh, that's a daily on it. So maybe I'm looking at intraday. All right, that looks like 2 drives there. All right,
yeah.
so
it's still on its way.
We're so close. Yeah, still could go.
Target of 150.
Yeah, I guess you could wait for 142 to close.
I'm pretty sure that no matter what we do, RSI is going to be diverging, though. I mean, I find it almost impossible to retest during this business cycle the 85 daily RSI reading that we had here.
Okay, yeah.
I mean, that was a super extreme reading for a daily RSI, especially for a stock. I mean, and look at this. This is simply parabolic, right?
Yeah. Yeah.
Look at this price action.
It's so close I could taste it.
Yeah, I mean, look at this price action. It's just nuts. It's parabolic. I mean, back in 2010, we were at $22 and we're currently at 150. I mean, within less than 10 years, right?
Yeah.
We have the price going up, what, 7 times?
And in a year, 92 to 146 is pretty good too. 50%.
Yeah, absolutely. I mean, look at this.
Yeah.
We were at the end of December at Christmas time. We were trading at 93 and we're currently almost at 150. I mean, it's nuts. And it's nuts because, I mean, you know, I'm a computer tech guy, right? I don't think that Microsoft, you know, since December has really like launched any, you know, big revenue making products, anything, you know, groundbreaking or, you know, something that this is probably just multiple expansion. I mean, it's.
Well, the gap was on some deal they got instead of Amazon because.
Yeah, but that happened there. I mean,
gap.
What about the rest of the move higher? You know.
Oh, yeah. Okay. Yeah.
Yeah, you're right. That gap there happened because of that. But what about this move?
Yeah. It was like Dominic, a blue chip tech to own during the bull market.
That's what Dale. Yeah, that's what Dale is talking about. But keep in mind that what you're saying happened here in this gap. But we had already made a move from 92 to 142, right? Within a year. I mean, it's unsustainable, really. So, you know, this is the type. If you remember, the other day we were talking about a potential wedge in the S&P. An initial wedge I had drawn, which I was saying that, listen, this is not a terminal formation because its inclination is not steep enough to be sure that, you know, this is going to end up like, you know, breaking the downside. It might break to the upside because it's, you know, it's not steep. But this is the opposite here with Microsoft. Here we have an ascending wedge that is definitely a terminal formation. I mean, worst case scenario, we've seen that before. You can get a market in the very, very short term,
Rollovers. Yeah.
getting like some type of a blow off like that. But that's going to be it. Boom, then. And as we said, Microsoft has been a very good proxy for this business cycle having to do with, you know, stocks performance, right? For your information, just showing news that Amazon is suing over the MS deal with the government for corruption. Okay, that's quite interesting, actually. That might move both. So speaking of which, thank you for reminding me, Ziggy. Now, Coach, have you noticed this? This is Amazon, right?
Yeah, not even close to the highs.
So let's...
All the FANGs, most of the FANGs are not making new highs.
Let's add the SPX.
They're first time they've been left out on a run to new highs.
So look at this.
Yeah.
Look at how nicely correlated with risk.
Yeah.
And look at this divergence here.
Yeah.
That is also for me something telling.
Yeah. You could probably, I think Netflix is doing the same thing.
Let's have a look at it. Haven't had a look at it in some time. Phew, actually, yeah, a lot more than that thing, right?
Yeah, right. Okay, Facebook. Let's see Facebook. So this is different. They say it's different this time. Really is. Okay, even Facebook's putting in a right shoulder here.
Yeah.
So what have we left out? Google.
Is it Google, if I remember right?
Alphabet.
Yeah, no, it's Google. I remember right. The ticker. Yeah,
okay,
Google
that's
is
the only one.
Yeah, Google with Microsoft is actually following the market higher.
But Microsoft's not in FANGs. So
no, I know.
But the only
I mean,
FANG stock doing
we...
it is Google.
Yeah.
1 out of 4. That's kind of unusual.
We also have Apple.
Oh, that's right.
AAPL,
okay.
which
2 out of 4.
As you see, perfectly correlated there.
Yeah. Outperforming.
Also, this last move in Apple seems even more, I mean, just the last leg I'm talking about now, not the longer term chart, but this last leg higher in Apple. I mean, look at this.
Looks like it's blown off. Yeah.
I mean, this is absolutely unsustainable. Look at the angle.
Yeah. A parabola.
Yeah, it's, I mean,
parabola.
It is completely unsustainable, right?
Yeah.
So, yeah, something has to give here. And, you know,
anyway, I do think people could look back in history and see if only 50% of the FANGs were making new highs when the market was making new highs. To me, I think that just speaks of, you know, maybe a chink in the armor in NASDAQ. That may be something that Jim is talking about.
Speaking of which, Coach, look at the daily RSI in Apple. It's almost at 82.
Jeez.
Sorry, it reached almost 82 yesterday. Actually, today it's lower, but I mean 82. Come on.
Yeah.
So yeah, something has to give. I mean, it's everything is like overblown, you know, to the maximum. And RSI, despite all the froth, still holding the divergence trend line like a champ, right?
Yeah.
Sorry, did I say RSI?
The VIX.
Yeah, sorry, VIX. I meant the VIX. Yeah.
Yeah, the VIX can't make new lows with successive new highs in S&Ps.
And that has been the case since November of 2017.
Oh, you know how every once in a while you hear about like some, outrageous long shot bet being made? I think some guy poured in like $5 million into April 60 strike in VIX. 60.
Whoa, 60.
He must really be looking for something this spring. But
I mean,
anyway,
60 is like is something that I don't think we've seen 60 during the past so many years outside of the
50.
financial crisis.
Yeah, 50.
I mean, here we spiked to 50. So
Right.
to find 60,
Oh, what's
you
that back there? And
it was the
line?
2015 sell-off. You have to go
Okay,
back
that was 52. Okay, you have to go back to the financial
to the
crisis.
financial crisis. Yes.
And what did it get up to? 90?
Yeah.
Oh,
It went
okay.
up
Well,
to
then this is a
96.
okay. So it's only a 61.8% retracement. It's not a big move, Steve. It's only a retrace here. Maybe it's 78.6. I don't know. Anyway,
there's
I thought
absolutely
I'd let you know that if something like that happens, that's where like a guy turns 5
there's
million
absolutely no question about it.
into
We are
500 million.
we are going to see VIX at 60 again. There's no question
Yeah.
about it.
Right.
Now the when is a different story, but I mean,
Well,
whoever believes that we found them, the magic potion.
He's
that
thinking by April. That's his bet.
I can tell you one thing for sure. If by April VIX hits 60, the market is not going to stop going down. And the reason the market is not going to stop going down, it's because it's going to start being a self-fulfilling prophecy. Meaning, the chances of Trump to get re-elected is keep the economy afloat and the stock markets propped up for exactly another year.
Yeah, he loses with a 30% drawdown.
If for any reason we see a drawdown so close to the
They'll
election
declare
period,
martial law or say the election
so
was
close
rigged
to the
anyway.
election period. Now listen what's going to happen then. Then the market will have to start violently repricing a socialist president.
Yeah.
Which means that no matter what they do trying to prop up the stock market, then it's not only that they will already have the major issues that the economy is not in a good shape anyhow, this is the longest business cycle and it's extremely fatigued and everything else, but the market will suddenly have to start pricing in a future US president that is going to be much less friendly to business.
Ever hear this expression, Steve? The problem with confidence is once the con is exposed.
The problem with confidence is what?
Once the con is exposed.
Yes.
So
yes.
We'll probably know about the con by if something like that happens. Anyway, yeah, I mean, I think it's a decent spec. I mean, I wouldn't buy a 60 strike, but maybe like a 30 for an event, something like that. Anyway, just thought I'd let you know that someone's looking for, let's see, April.
As I said though, and everybody has to keep that in mind.
Maybe Trump resigns in April.
If we get a big drawdown close to the elections, and by close I mean even 9 months before the elections, I think we're not going to stop for the reason I mentioned, because then the market will also at the same time have to price in a different US president. And if it's somebody like Warren, for example, with what she has been promising or whatever, there is no chance that companies will be able to maintain these kind of valuations. So, and there's going to be a big flight of capital from the US.
Where will it go?
I don't know, that's a different story.
Yeah.
Puerto Rico, most likely.
Really?
Really? Of course.
Why?
I mean, rich people are going to move to Puerto Rico. That's what I mean.
Okay. Why you mean because of taxes?
Yeah. There is no federal
They'll
tax.
change that. I know. They'll change it though.
There is no federal tax, first of all. And second of all, they sign like an agreement for that Puerto Rico guarantees you something like 4% tax for 30 years.
Yeah.
There's already quite a lot of people that are going there for that reason.
Oh yeah.
Yeah.
I was thinking about it before all those hurricanes, but you're right. Your hero is there. Peter.
Peter Schiff, eh?
Yeah. Yeah.
Yeah, Peter
He's there.
Schiff. You know, Peter Schiff is not my hero. He's a guy that
Oh, come on. You
believes in.
have his poster up in your
No,
office.
I'm telling you. I'll tell you what I mean. He's a guy that is a believer of Austrian economics and real money and real economic growth.
Come on, tell the community you love him.
And I'm in total agreement with all those people because I'm of the same school of thought. As simple as that.
All right. Peter and Steve sitting in a tree. All right. Anyway,
Ziggy says, which is a good comment, that Netflix is getting hit by Disney.
Yeah.
Let me add to that, Ziggy. Not only Disney. Don't forget that Apple also recently launched its Apple TV service. So it's both Disney and Apple, getting in the game. Which you know how it is. Eventually, it would happen. I mean, this is the beauty of capitalism. Once you have a market that creates nice profits, you attract more competition. As simple as that, which is good for clients, obviously.
Imitation is the highest form of flattery unless it's on Twitter and someone's trying to be you.
Yeah. Greg unfortunately has been burned more than once.
I know. Okay. All right. Well, want to call it a day?
Let's see if we have any more questions.
Okay.
And yeah, no problem. Anyhow, it's quite a it's a quiet day. There's no question about it. Let me see if there's something we didn't cover. This is your last chance, guys and girls. If you want to ask something, throw the question in now.
10-year note, Brock.
There we go. 10-year note. Let's go. Here's the ZM.
Then Ronan wants medals.
Okay, so very interesting juncture here in ZN because look what we're doing here.
Yeah, I didn't trust the bounce in TLT. I think there's another wave down.
We are back testing this broken channel. So it's an important level. If we get rejected from here, I think we're going quite lower, with my next target being here. You see these lows and that unfilled gap.
Right.
So, and the 200 DMA is also there, and it's also the 38.2% PIB. So, multiple confluence of supports at 2670 roughly. I'm just making the translation. 126.70. I think if we get rejected from there, next stop is 126.70.
And if that happens, that's how we get 1420 gold and 110 yen.
Oh yeah. Very likely. I mean, yes, if that happens, it should keep gold and silver under pressure temporarily. Gold is rebounding before reaching this pennant support. But regardless, as we've said,
Greg said 1480 is the key here yesterday when you were blue screen.
I agree with him.
Yeah.
Corrections, it's this zone actually. You see the zone that I've drawn here? It's that zone.
Right.
So corrections can be very complicated. So until we pass over this support resistance zone, as you said, Greg mentioned it yesterday as well, there is always the chance that we might,
one more time.
Yeah, we might even, let me fix the color and the thickness. There we go. That we might do something like that, right? So I agree with Greg, 1480, 1485. It's an important level. I think that if we go above it, then we're headed to retest the highs and most probably higher at the long-term 61.8% fee, but 1586. Personally, I'm very, very convinced. I mean, I have a very high confidence that this 1586 target is going to get hit.
Yeah.
Now, I can't tell you if it's going to be in 3 weeks from now, if it's going to be in 2 months from now, but I'm very confident that we're going to hit this 61.8% fib. Having to do with silver, silver rebounded from a nice horizontal support area. I think that silver needs to cross above 1725 to start being more constructive. Until then, we might see, a deeper correction or whatever. Anyhow, it's a good sign that we found support at, a key support level. We might head directly from here to new highs. But as I said, 1725, breaking through it will increase confidence in that. When S&P and Nasdaq start failing, will the FTSE 100, DAX 30, and CAC 40 follow suit? Yes, they should. Now, it doesn't mean that they're going to do it in the same pace, because often we see big momentum divergences, but there is no chance that the S&P and the Nasdaq are going to be tanking, and the DAX and the FTSE are going to be flying. No chance. They might be losing less, for example, but more or less they're going to be following the same direction. Yes. Glenn is asking, should I assume that you're asking about the peso? Glenn, probably that's a spelling mistake. I'm assuming you're asking about the peso. So here it is. Quite a nice big rejection yesterday, but keep in mind, there is nothing conclusive here until we break out from this huge and almost 3-year-old symmetrical triangle. So, we've reached the point that, in my opinion, anything within this triangle is simple noise. But once we break out from this one, and we will, I mean, it's a contracting range, right? I mean, a triangle, the two lines are contracting. So it's inevitable that this is going to break out. Once it does, you don't want to be in the opposite direction.
Yeah, huge move.
Yeah, because there is so much
compression.
If I want to use physics terms, there is so much dynamic energy accumulated here that we might see an explosive move once we break out from here.
It's like a volcano.
Yeah, something like that.
Yeah. It's okay, like coach. It's like me when I lose my temper.
Oh, I thought you would say something inappropriate, like it's like me when I'm in bed or something like that.
It's like how I used to be. A few decades ago. So anyway, guys and gals, thank you very much.
I wish everybody a lovely weekend.
Yeah,
and we'll be back on Monday.
Yeah, good hunting the rest of the day, and thank you for helping us make Face a place where people can get better. All right. Okay, guys, that's a wrap. And don't just count your euros or dollars or bullion. Count your blessing. See everyone on Monday. Have a great weekend. Have a good weekend, brother.
You
See
too,
you, Steve.
Bye-bye.
Okay, buddy. You too, John. Brock. Adios.